Alright guys, so now that you know what an advanced continuation breakout is, let's focus on the entries and the stop loss and the targets for this specific strategy. So I'm not going to spend too much time in this intro, we're literally going to dive right into it. And the targets are very simple, the stop loss is very simple, the entry is very simple. But the entry is probably the most difficult part of it all. But the strategy, the stop loss and the targets, they're very similar to the other strategies themselves. Okay, so let's not waste any more time. Let's dive right into the charts, and I'm going to show you multiple examples on how to execute strategy number 4, advanced continuation breakout. All right, guys, so in the previous lesson, we explained what the advanced continuation breakout is. In this lesson, again, we're going to be focusing more on the entry, stop loss, target, and such. So let's have a look at this first example that we looked at in the previous lesson, Kiwi dollar long from December 2017. Again, it was taken during Christmas time. I missed the trade because I wasn't scanning charts in a lot of detail during that time. I pretty much took a week off during Christmas. But when I came back on the charts in beginning of January and I looked, I'm like, damn, I missed a pretty decent setup here. This was a nice ACB. So that's why I wanted to share it with you guys, because it was a nice ACB, specifically in the higher time frames. Very clean. Okay, so let's go over it again real quick. And the ACB will typically have like a big push on the daily chart and a quick retracement to some kind of support and resistance. Okay, so we have this big bullish breakout and then a quick pullback to the daily 50 EMA, the previous highs, 0.38 to Fibonacci, and the 4-hour 50 was right in the 6 spot as well. Okay. So that's what the daily chart is typically going to look like. A big push, quick pullback, okay? And that's it, So you're typically not going to have like a reversal candlestick or anything like that, because that will happen after the trade is taken, Usually it will just be kind of chilling on that daily 50 EMA or whatever support and resistance. In this case, the support and resistance is the daily 50, but it can be a horizontal line, it can be a trend line, But in this case, it was that daily 50 EMA. The price action was just kind of sitting, rejected the 4-hour 50, which was also in this area, and trade was taken long. Okay, so just know that from a daily point of view, it's just going to be a quick push, quick pullback. That's it. Okay, but you still want to kind of make sure your overall bias is still bullish. You don't want to be taking weird setups. You still want to make sure it looks good. And this looks pretty good. So when this broke out, then the next thing is you need to figure out where your target is, obviously. The safest target, as I already mentioned in the previous lesson, is the recent highs on a 4-hour chart, which is going to be the recent highs on a daily chart as well, right? And that will be quick in and out 2% profit. But you can have a look at the higher time frame to see if you can push it farther, because this daily chart in particular is a continuation. It's a kind of a new trend, right? It was trending downwards and then it broke out, it did a quick pullback and it continued up, so it's just a break and retest of the daily 50 EMA. And you can look at the weekly chart and you can see that, okay, weekly chart is in a pullback, it's rejecting major support, right? But it's in a pullback, so obviously you could target the recent highs on a daily chart and the 4-hour chart, because that was the 20 EMA, but also the trade happened after this big bullish engulfing. And because the daily chart gave you a trend change, you could have pushed it up to the weekly 50 EMA and weekly 0.38 to Fibonacci, right? So 2 options, either quick in and out or push it a little bit farther. In this opportunity, you can do both. So that's it. Then from a 4-hour point of view, obviously we need the break and retest of that 4-hour 50 EMA. So in this case, big acceleration to the upside. The CBO never presented itself and never retraced for that CBO. Just kind of continued to go and go and go. And then when it finally pulled back, it pulled back to the 4-hour 15.38 to Fibonacci. Okay, right there. The 1-hour chart, because of that big pop on a 4-hour time frame, the 1-hour 50 EMA was pushed with that momentum. And then when the 4-hour chart finally pulled back, that causes a break of the 1-hour 50 EMA. Okay, that's what makes it a little bit more of an advanced setup. Okay, and at that point you got to be looking for that continuation, that advanced continuation breakout play. Okay, so the 4-hour chart is the continuation, the 1-hour chart is that breakout play. So you're looking for some kind of bullish price action. In this case, it's a falling wedge. Sometimes it's a different triangle. It can be also a double bottom. It can be a head and shoulder pattern, an inverse head and shoulder pattern, right? Any kind of continuation price action. It can be a flag, so when we look at price action patterns, any one of those that will work, which is a continuation pattern, okay? And in this case, it was a falling wedge. So then what do you need? You still want to make sure that, kind of like with an advanced breakout, you want to make sure that the breakout is going to happen now, okay? So you don't want to enter too early. You want to be sure that the breakout is happening this moment, okay? So it's good to look for some kind of candlestick formation. In this case, we had a tweezer bottom, okay? So this double low test kind of thing, tweezer bottom, and then it started to explode to the upside, broke the 5-minute 50 EMA, and the trade was taken long as it was rejecting this 4-hour 50 at the same time. And the daily 50 and 0.38 to Fibonacci in the previous daily highs, right? So there's quite a bit of support here. You get the 4-hour 50, 0.32, the daily 50, the previous daily highs, and then at the end of it all, the wedge tells you that the market is decelerating. The candlestick formation tells you that all those levels were just rejected, okay? And then the breakout above the 5-minute 50 EMA is your entry long. That's the final thing, is the break of the 5-minute 50 EMA, right? So let's focus on this entry a little bit more. I'm going to delete this, and we can just kind of start from scratch. Right, so I'm not gonna jump back on this one because there will be a lot of clicking to watch the whole move play out in real time. But I'm just gonna show you here real quick. So this already makes your watch list when it's pretty much sitting on the 4-hour 50 EMA. But this can always start off as a potential IBO, like I've been saying, because this is a break of the 1-hour 50 EMA. But are you gonna take this as an IBO? Probably not. You're trading directly into the daily 50 after a massive bullish engulfing, right? So some people do, but that's a very okay kind of IBO. So a lot of times what I mentioned is that the ACB will kind of look like a false IBO, like a trap, okay? And this is definitely a trap because it has way more support. Like what's our bullish confluence here? We have a bullish engulfing on a weekly time frame. 1. We have a new trend change on the daily chart, okay, breakout and retest. 2. We have the daily 50 EMA, we got 0.38 to Fibonacci, we get the previous daily high, all acting as support. We have the 4-hour 50 EMA acting as support. We have a falling wedge on a 1-hour time frame. We have bullish candlestick formation on top of that. That's 7 confluence factors to the upside. There's not much bearish confluence here, except the fact that the 1-hour chart broke down. You know what I mean? So the IBO is definitely a trap, and this ACB was the correct play here to the upside. So when you finally are comfortable with the move, with the rejection that's happening, so in this case it's the tweezer bottom, then you're just waiting for that 5-minute break to the upside. And you can already kind of position size it, when you're just waiting. So the way you would start off your position sizing is always kind of, okay, plan the breakout. So the breakout somewhere here will happen somewhere there. You would already start position sizing when it's already kind of sitting on that 4-hour 50 right there, when it's already decelerating, right? So you already kind of plan it. And you would plan it in a way that right away you would draw out your target. Because first you need to figure out whether you're going to be able to make 2% up to the highs, okay? So first you need to figure out how much room you have. So in this case, 50 pips. 50 pips will take you right to those 4-hour highs, okay? A nice and even number. So then, what's my stop loss? I need to make sure that I'm able to get 2% out of this position at minimum with that target of 50 pips and a safe stop loss. So you can already have like a 20 pip stop, I don't know if I mentioned this earlier, but I don't like having stop losses that are tighter than 20 pips. So I'm not sure if I did mention that earlier. If I didn't, write that down. This applies to all strategies, every single one of them, except phase line breaks. Okay, phase line breaks can be a little bit different, but that typically applies to every single strategy, including phase line breaks. There's a minimum stop loss of 20 pips. Otherwise it's too tight typically. So minimum of 20 pips, so you can do that, and that will be a 2.5% position. Or you can simply go and have a 25 pip stop loss for an even 2-to-1. And it works. It still protects you pretty well. 20 pips protected you pretty well. 25 pips obviously protects you a little bit better. It's quite a bit below the tweezer there, so decent stop protection. Okay, that's how the stop protection is going to look like here. This is how you really position size this position. You're not putting your stop loss below 0.618 Fibonacci like on the IBO or the CBO. It doesn't work that way. It's very similar position sizing as with the advanced breakout. Okay, so when you're taking the advanced breakout, you want to make sure that you're able to make 2% up to the 4-hour 50. So you do the same type of process. You figure out your target. Okay, the target is going to be 50 pips up to the 4-hour 50 EMA, right? In this case, 50 pips up to the 4-hour highs. And then you need to make sure that your stop loss is going to be decent, well protected. So you can go 20 pips. That's already not bad. Or you can simply go 2-to-1 or with 25 pips. That would be a 2-to-1 position. Easy. So that is how you figure it out. If you cannot get 2%, if your stop loss is too tight and you cannot get 2%, no trade. Period. If I cannot get 2% out of this position because my stop loss will be just too tight, it'll be like just below the lows or whatnot, then no trade. Moving on. There'll be better opportunities. Because this is a little bit of a riskier setup, I want to make sure that I get a higher reward risk ratio than just 1-to-1. So I want to make sure it's 2-to-1 minimum. So in this case, we can do 2-to-1, but as we also showed, the weekly chart and the daily chart also presents a little bit more to the upside. You can take quick 2% up to the highs, and that's the safest target, right? So this target at the recent highs of 50 pips, that's the safest target, okay? But you can obviously, just like with any of the other strategies, you can obviously push it farther if you believe that the higher time frames give you that longer term bias, right? So because this daily chart gave you this break and retest of the daily 50 EMA, because the weekly chart was in this pullback, but it was right after this bullish engulfing, so you could have said, okay, yeah, I can target the recent highs because that's also the weekly 20 EMA and move on with my life, or the momentum is still there so I can push it up to weekly 15.32. If you chose that option, then your target would have been at 70.75. Okay, so 70.75. Let me just fix that. 70.75 will be 4.3%. And you can also even draw out. Let me just fix this before I explain this next part. There we go. So you can also even draw out on the 4-hour time frame, you can draw out your Elliott wave theory, your Fibonacci extension. So in this case, let me draw it out again. So the Fibonacci extension would look like this from the low to the high of the wave 3. So this is the wave 3 run, wave 4 pullback. Whoop. Using the wrong tool. There it is, wave 3 run up to the highs. Wave 4 pullback, and it gives you a profit target of 0.618. 0.618 is the best profit target for the wave 5, to catch the wave 5. Okay, so yeah, you could target the recent highs for a nice easy 2% move, or you can push it a little bit farther to that weekly 50 EMA, to that weekly 0.3 to Fibonacci, and in this case, that's also the end of the wave 5 Elliott wave theory, which is 0.618 Fib. Our target is a little bit below that. Perfect. So that gives you pretty good confluence for that profit target level. And then you can push it for, 4.3%. So that's how this position size looks like. That's just how you're going to do your position sizing. You're going to first figure out how much room you have up to the recent highs. In this case, it was 50 pips. Then you're going to be like, okay, half that is 25 pips. That's 25 pips give me good stop protection. In this case, yes, it's decent stop protection. It's not choking. It's not like right below the candlestick on a 1-hour time frame. It's well protected. It's kind of well below it. So 25 pips is good. Like I said, first thing you figure out is the target, how much room you have up to the recent highs, 50 pips. Half of that will give you a 25 pip stop loss and a 2-to-1 reward risk ratio. 25 pips then, does that give you good stop protection? Answer is yes, it does. And then that's your position to start off with. And you can just stick to that 2-to-1. That is the safest target. Or if you believe there's more room there, then you can obviously push it farther, in this case for 4%. So that is it with this example. That covers it. That covers the entries and exits and stop loss and targets. Let's have a look at the next one so you guys have a little bit of a wider exposure. So that is it. Let's have a look at the next example. Okay, so in this example, we're going to be looking at the pound kiwi trade that we covered in the previous lesson. And this one's a nice one. It's a beautiful, beautiful 4-hour time frame. And the 1-hour chart is not bad too, but the main thing that I really love about this trade is that 4-hour chart. But let's give a quick refresher before digging fully into the entry, exit, stop loss. I'm going to go candle by candle this time around, so when we look at the entry, we're just literally going to go candle by candle. But let's give a quick update or refresher on this setup here. So the advanced continuation breakout, okay? Continuation on the 4-hour chart, breakout on the 1-hour chart, okay? So let's have a quick look at the higher time frames. Remember, I was saying in the previous lesson that the issue here was that this daily 20 EMA bounce, because the trade literally happened right here as I was seeing this daily chart and I chose to go short. So I was saying previously how this is an example of that trap that I was talking about, because some traders might be saying this is a long opportunity, okay? But by knowing this strategy, even though you may not be comfortable with executing advanced strategies yet, which this is more of an advanced strategy because, there is bullish signal, like right here. So it is a little bit more of an advanced strategy, and you might be comfortable with the first two first, the IBO and the CBO, and then the advanced breakout, and then this. So I would really say master the strategies one by one, but know them all, so that you can at least, if you see a strategy playing out, you can at least watch it, but master them one by one, really just focus on digging into that, because every single one of the strategies has a purpose. You probably already know that. Every single one of them is similar but different, because every single one catches a different part of the market movement, You got the ABO that catches the first, the IBO catches the second, CBO which catches the third, ACB the fourth, And if you only know the first two, then you can only catch that part of the market, which is fine, because they're going to give you the IBO and the CBO, they're going to give you the most opportunities anyway. The ABO is extra and ACB is extra too, but it's nice to have them in your back pocket, at least that's how I feel, that's how I use them. But for now, master what you can, one by one, but know them, because this strategy will help you in spotting bear traps or bull traps in the market. Trades that like this daily chart might be showing you a bullish bias, but when you start digging farther, you'll start to realize that, hey, there's a weekly tweezer top. This can go down from here. Hey, what about this 4-hour 50 EMA rejection, the deceleration, the 0.382, the support and resistance, the perfect candlestick formation? This might go farther down and confirm the weekly. What about that 1-hour time frame? It's actually decelerating within a wedge, and then massive momentum as it's bouncing off that 4-hour 50, breaking out of the wedge. This is probably going to go down, not long. So if you know the criteria for the strategy, even though you might not be comfortable with executing that short because maybe you still have doubt and you still might think that, yeah, I might go up and bounce off this 1-hour 50 and confirm the daily and then go up, it might happen. So if you still have doubt, then you just sit on the sidelines. Don't take any trade. Don't take the long, don't take the short. Sit on the sidelines. When in doubt, stay out. Write that down. When in doubt, stay out. Because at the end of the day, you want to be a pro risk manager. But for those who are comfortable, then you can take the trade short, And at this point, pretty much when this 4-hour time frame was decelerating here, giving you the reversal candlesticks, and the 1-hour chart was kind of within this wedge, starting to accelerate down, at this point, that was confirming that weekly bias. And at this point, this weekly or daily bullish bias was not really existent, because we had a much more bearish confluence than bullish confluence at this point, And that's the trade, the breakout, that continuation on the 4-hour chart, right? And the breakout on a 1-hour time frame. So let's focus on the entry. I'm going to jump back to the entry point. And you guys can really kind of follow along step by step of exactly what I was saying, or what you would be seeing while executing a strategy like this. There it is. Okay, so One by one, maybe, yeah, you know what? Let's actually jump a little bit farther back. Yeah, that'd be better. Give you guys more of a real-time kind of feel. All right, so check it out. At this point in time, this is not good enough. It's already giving you similar kind of thing, but you know, there's nothing epic. I'm still not convinced. At this point, I'm sitting on the sidelines. That's kind of how I felt. I don't want to go long because I don't like the weekly. I don't like this 4 hour. You know, the 1 hour chart is still kind of like slow and within this potential pattern. But there's still nothing really telling me, yeah, you know, go short now. I want a little bit more. And you can still also see it's still low volume in the market, which is advanced breakout. You know, with that strategy, we want to kind of be executing high volume times. So still kind of low volume in the market. So at this point, I'm like, when I'm watching, I still want more, you know. So let's go candle by candle, another hour or two, and see it popped right back to the upside here. And still going. At this point, I'm like, okay, I might not even be considering the trade at all anymore, you know. But I'm still kind of watching. I'm still curious and see what's going on. And boom, okay, it's kind of slowing down. Let's have a look at the 4 hour chart at this point. Oh, it's too much. There we go. So if you look at the 4 hour chart at the same kind of time, we're going to get the same kind of movement. So here's that bullish candle coming in. Boom. That's that bullish candle that we just saw, okay, on the 1 hour chart. Now, at this point, it doesn't look like a rejection, right? But now, here, we're now falling back down. Okay, so as the 1 hour chart is falling back down, we're falling back down on the 4 hour chart. We're kind of stalling. You see, we're stalling at that level, but still nothing crazy. You don't really want to go short yet, you know? If you had like a massive high test on a 1 hour chart instead of that inside bar, then maybe you would at that point, you know, because of the beautiful candlestick formation. But we don't really have anything crazy that's standing out. But now, see, as we're kind of falling down here, one by one, we're starting to develop that 4 hour high test, and we're starting to kind of accelerate on that 1 hour chart. And let's kind of move forward here on the 5 minute time frame to that time. So here's that acceleration, that's that bullish candle on the 1 hour chart. And here we're falling down, creating that inside bar, because this is now an inside bar reversal on the 1 hour time frame, right there. Right, and we're moving sideways, and then all of a sudden, soon we're going to break that 5 minute 50 EMA. And now we broke the 5 minute 50 EMA here, right? And now we're developing this 4 hour high test and this 1 hour acceleration. And at this point, if you liked what you saw, you know, because at this point, the 4 hour chart only has like maybe 10, 15, 20 minutes to go, you know. So at this point, if you liked what you saw, you could potentially already go short, you know. And if I had a 1 hour high test, at this point, I would be going short. If I had like a 1 hour high test, it looked great, then at this point, I'll be going short at this 5 minute break. But, you know, I chose to kind of stick around and just wait a little bit longer. It's all when you're ready. You know, when you're ready to execute, you're going to execute. And at this point, it's right there. You know, at this point, the 4 hour chart is in this last 5 minutes. Let's move on the 1 hour chart. And there it is. At this point, the 1 hour chart closes this big bearish candle, and 5 minute time frame, that was pretty much right here. Okay, look at the volume. Volume started to explode to the upside during the last 15 minutes. The 4 hour candle is now about to close as that 4 hour high test. You know, the 1 hour chart, the 1 hour candle is about to close as this massive acceleration to the downside, you know, at peak volume. Now I'm ready to execute, right? So patience is important too. With advanced breakouts, mainly with these two strategies, the advanced breakout and the advanced continuation breakout, patience is extremely important, you know. Execute when you're ready to execute for yourself, when you're comfortable, you know. And here was that trade was taken, price went up a little bit until it finally started to crash. There it is on the 1 hour time frame, you know. And again, as I was taking the trade, let's actually jump back before I fast forward. And as you're taking the trade, again, entry-wise, focus on the entry-wise and target placement, so you're ready to execute. You would have already had a pre-planned, as it's kind of breaking that 5-minute 50 EMA initially, and you believe that the 4-hour chart is making a high test, you would have already be pre-planning the entry, so 200 pips looks good, targeting the open and close prices on the 4-hour chart, right, the previous lows. So 200 pips looks good. That would mean a 100 pip target would be 2-to-1, but that seems kind of high, right? Look at the 1-hour chart, the 4-hour chart, where it's sitting. It's a good target, and that's the minimum, right? It would give you the 2-to-1 reward risk ratio. But to me, yeah, that's great. But if the 4-hour chart closes the way it's closing, then I can probably go a little bit tighter. So how about like 80 pips for 2.5 instead of 2-to-1? Extra 0.5%. That seems alright with me. So that's what I ended up doing here. Or you can just simply go for that even 2-to-1. That's what the position size would have looked like. So at this point, as it was breaking that 5-minute 50 EMA, you would already have everything calculated. You would know your position size, your target, your stop loss, as it's already breaking down and you're ready to go short. You should already know this stuff so that you don't have to do it last minute. You should know based on your account size, how many lots you're buying, your position size itself, so that when you're ready to go, you just click a button and you're ready to shorten the position. You don't have to be doing all these calculations in your head. A lot of the times I already pre-planned this when I'm making my watch list, specifically with the IBO and the CBO. I'm typically already pre-planned. As I'm making my watches, I already know exactly what my target is going to be, where I want to approximately enter, where I approximately want my stop loss, my position size. So that when the trade happens, when the alert gets triggered or when the opportunity is present, I can just execute. I don't have to do all these calculations, right? So at this point, when I was ready, the volume kicked in, the 4-hour chart closed, at that point I execute. You execute right now. Boom. Volume kicked in, you go short with that position size that you had calculated. In this case, still roughly targeting that same level, tiny bit lower. Stop loss still looks good, right? Up nicely above the highs. And I went short. So that's how you kind of start off, And then price consolidates, and then finally starts kind of accelerating to the downside here. Right now we're already in profit. Here we're about 1% in profit until finally volume kicks in. Volume's still high here. Oh, we missed profit target tiny bit. Not a big deal. Until finally boom, target was hit at the end of the day. There we go. And continued lower. Right, so let's have a look at that 1-hour time frame right after the entry, what it looked like. So at this point, we're already in the position and we're breaking down. Look at that. Broke the 1-hour 50 EMA, and at this point, zero concerns. We already cleared the 1-hour 50, zero concerns anymore, Which at that point, that was still the concern because it's a breakout, But that's why you wait for the volume. That's why you execute when you're ready to execute, when you believe the volume is there and the momentum is there and the candlestick formation is there, And here we broke down and it's already accelerating, looking great. Looking good. At this point, I believe that 5-minute pullback's coming in somewhere here. There it is. There's that pullback. But it's already fully kind of broke down. At this point, there's barely any concerns. And then, boom, profit target got hit right there on that spike. Perfect, easy. And then 4-hour chart, same thing, already in the trade here. And look at that phase line break, So as it breaks that phase line and closes below that phase line, it's already gone. It's good to go. That's when the 1-hour chart also broke the 1-hour 50. Boom. No issues here anymore. No concerns. At this point, it's a good trade. It's working out. And here we're going to have that quick pullback. But no concerns. It's looking good. In this case, if you have a concern, however, let's cover that. If you do have a concern, and you can kind of monitor the 1 hour 50. If it breaks back above the 1 hour 50, you can kind of move your stop loss to break even, so eliminate all your risk, move the stop loss to break even, and that's it, You can just do that. Because that's the thing, what happens here, if it breaks the 1 hour 50, maybe it's a higher low on a 4 hour chart, and maybe it will just continue going up, right? So if you want to eliminate your risk, you can do that. Sometimes it will go break it and form a head and shoulder pattern on a 1 hour time frame and continue going down, So a lot of the times I don't do it. I just kind of let the analysis play out. But if you want to kind of eliminate that risk, once it breaks down 1 hour 50, you can either move down your stop loss to break even, or just shut down your position, take your profit if you want, or just hold it and let it ride and let the whole analysis play out. At the end of the day, your strike rate overall, the probability model should work out in your favor without moving the stop loss. At the end of the day, you're making 2 to 1 on this position. So even if you're wrong 50% of the time, you're still going to make profit. Plus, there's going to be other opportunities where you make more than 2 to 1 on these type of trades, right? That's how you can react if you want to. But there it is, momentum came back in and target was hit. So I hope that all makes sense, right? Pretty easy, pretty straightforward. It's not too complicated. A strategy should not be complicated. It should be just complicated at the beginning until you understand it, but it shouldn't be anything complicated, too crazy, So I hope at this point you're already starting to kind of understand it. We've already been going for over an hour into the strategy with the previous lesson and now this lesson. So I'm pretty sure you already kind of have a good grasp on how to execute this trade. And here was just another example of a really nice one, But remember with this one, this was an interesting one because this is the one where that daily was giving you that 20 EMA rejection, And at this point, our profit target was hit. So that's it, guys. That's it for this example. I hope that all makes sense. Let's have a look at the next one. Okay, guys. So in this example, we're going to be looking at another ACB from on QEN, and this was a position again I took, which was an interesting one, and I explained in the previous lesson. This is the one where I initially missed the CBO, which happened right there. It was a beautiful CBO, and I never had an order placed, and when the live entry occurred, it just exploded to the upside, and I just wasn't able to get into it. So then I was lucky enough that the ACB presented itself, So like I mentioned in the previous lesson, when I looked at this example, it's handy to have these strategies that kind of line up one after another, because I don't want to have multiple strategies that catch the same move in the market, I want multiple strategies that catch different moves in the market, if you know what I mean. The ABO catches kind of the beginning, pre-breakout. The IBO is the first breakout. The CBO is the complete breakout when it breaks the 4 hour 50 EMA. And the ACB is kind of like the last stretch to catch the wave 5 of the Elliott wave theory, the last run of the trending market, right? So it's nice to have all these strategies that kind of line up one after another and not have multiple strategies that really catch just the same move, if you know what I mean. So all these strategies, they catch a different move in the market, and they're handy because sometimes you might miss a trade, but the higher time frames are just still great, Sometimes you're going to miss an IBO, or you're going to miss a CBO, or maybe the opportunity just never presents itself to catch it earlier, and then you get the ACB finally, So that's great, and that's why I create these strategies, because for that reason, I want to have different ways to execute a play, at different times within that trending cycle, within that trending market, and again, this is just another way of doing it. So the ACB on this Kiwi Yen was an interesting one. Let's talk about it a little bit more. Let me give you a quick refresher of this example. So if you remember, the daily started accelerating off of this ascending trend line here. Okay, and it was right after this bullish engulfing when I wanted to take that CBO to the upside, We had a falling wedge breakout here, so that bullish engulfing was a breakout of this falling wedge. And at this point, I wanted to take the CBO, but it moved so fast that it just kind of exploded to the upside. So see, there's a lot of bullish momentum. And then it rejected that daily 50 EMA. It looked like it was going to be a bearish trade. And I actually had people who took this straight short. I know people who took this straight short. Not an issue because it kind of presented an IBO. That's the thing. This strategy prevents you from taking traps in the market, okay? Because it'll give you a bullish bias, potentially. It will potentially, if the strategy is obviously present, it will give you a bullish bias. And then you're going to have doubt. And if you have doubt, then you don't take the IBO, okay? And then maybe you take the ACB instead. Or you don't take them at all and be a risk manager, But that's the thing. Initially, it kind of looked like it was rejecting that daily 50. But was it really? That rejection was only a 4-hour 50 EMA pullback. That's it. There was zero bearish price action on the 4-hour chart. It was a perfect pullback, perfect deceleration, perfect candlestick formation, bouncing off of that 4-hour 15.3 to Fibonacci, right? There's absolutely zero bearish confluence there. It's all bullish. At the same time, the weekly chart, so even though the daily chart is kind of giving us this bounce of the daily 50, that was only that 4-hour pullback. The weekly chart at that point was accelerating to the upside with this bullish engulfing. The bullish engulfing was already pretty much developing as I took the trade long. The monthly chart was also bouncing off the monthly 50 EMA. The overall price action on the weekly chart is bullish too, with this inverse head and shoulder pattern, left shoulder, head, right shoulder, and then this higher low forming a potential ascending triangle, right? So overall price action is bullish, or the current momentum is bullish, accelerating to the upside. The only issue was this daily 50 EMA, but at the end of it all, it was only a 4-hour pullback with bullish higher time frames, with bullish momentum on a daily time frame too, and then a quick pullback to support. It's still nice to have support, some kind of support. It's typically not going to be major. Sometimes it will be, but in this case, we have some minor support here: previous highs, previous lows, previous highs over here. And if you zoom out farther, there's a couple more rejections over here. So we do have a minor support level the price action kind of pulled back to right here, which was present here on the 1-hour time frame. That's that level. And this is where that wedge came in. So the continuation is the 4-hour chart. The breakout is the 1-hour chart. Because of how far it has moved on that 4-hour time frame, it will always break that 1-hour 50 EMA, and therefore it will potentially look like an IBO to the downside. But if you look at it closer, that 4-hour time frame is perfectly rejecting 0.382 and the 4-hour 50. And at the exact same time, the 1-hour chart is decelerating within this wedge, giving you a low test, a double doji, and then bullish acceleration to the upside, breaking that 5-minute 50 EMA and forming that 4-hour low test. Now all the confluences to the upside, not to the downside. And as you see, it never even decelerated on that 1-hour 50 EMA. It just kind of started to explode. Okay, so let's focus on the entry a little bit. I'm actually going to jump back to the entry point and show you how I executed it, step by step, candle by candle. So let's do that right now. So I'm going to jump right back to the entry price right here. Or actually, yeah, let's jump back a little bit farther. I'll jump back to the beginning of the day, okay? And we'll start off right there. So beginning of the day, that's when we got this low test reversal, okay, on the 1-hour time frame. So let's see what the 4-hour chart was doing at that point. There it is. So at this point, we're already developing that setup, and on the 5-minute time frame, we were sitting roughly over here. So let's zoom in a little bit and see what's going on. So at this point, you already see that a potential ACB might be happening. Okay, this is at the very beginning of the day, just as the new daily candlestick has formed. Okay, so right at the beginning of the new day. And at this point, you can already see that the 4-hour chart is potentially rejecting that 4-hour 15.3 to fib. The 1-hour chart already has the slow test. So at this point, you're just waiting for that entry, right? But it's still kind of a beginning of the day, and you're still waiting for that 5-minute break to the upside. That's what we're waiting for. But at this point, you can already plan your position. Okay, so let me actually delete that, and at this point, you can already start planning. So let's say you want to target, let's see if we can even target the recent highs and have a decent stop protection here. So I ended up going with a 50 pip stop loss, but targeting the recent highs, that gives me 70 pips. So it's 1.4. So I kind of didn't follow that rule of 2%, because you can see it's a bit tight. You know, if I really wanted 2% out of this position, I would not have been protected. And if I didn't have a larger bullish bias, this would mean don't take the trade. Okay, because I cannot give my 2% reward risk ratio. I would have to push my stop loss farther down. Let me make this larger. Right, you guys see what I'm saying? Because to take it on a 5-minute break, this is just an estimation, then targeting the recent highs, which is what I will always kind of like want to make sure that there's 2% there. If I'm targeting the recent highs, there'll be 70 pips, right? And with a 70 pip target, you know, for it to be a 2% move, I would need to have like a 35 pip stop loss. But a 35 pip stop loss doesn't fully protect me, because it still doesn't protect me below the lows. So I need to push it farther. I would need to have a minimum of 40 pip. Well, that's kind of tight too, you know. But 40 pip is already 1.7%. So it already takes a chunk out of that return, right? A 45 pip stop loss gives me 1.5. And that's already cutting into my reward risk ratio for this strategy. I want 2%, not 1.5, you know, and that's kind of what I want to average, a minimum of 2% on this strategy itself, just because it is a little bit more risky. So I want to avoid one-to-one trades. Doesn't make sense for me to take one-to-one trades on a riskier advanced setup. But 2-to-1, yes, because 2-to-1 positions allow me to be wrong and still make money. You know, have a 50% strike rate and still make money. However, if you follow the rules and you're patient with this strategy, your strike rate should be, you know, higher than 50%, 60, somewhere above the 60 range, you know, and potentially even higher than that. And with 2-to-1 reward risk ratio, you'll always be in profit, you know. So I wasn't able to execute a typical 2-to-1, which is something I always try to do, but in this case, I just couldn't. So why did I take the trade? Well, I took the trade because of the higher time frames. My bias was that, you know, this is probably going to go up because of this weekly bullish engulfing that's happening, and because of this ascending triangle that's also happening. To me, I believe that this was going to go up to 83, you know, somewhere to 83 right there. So plenty of room to the upside. So that was my target. So I wanted to target 83.0. I wanted to push it as far as possible. And because I was able to target 83.0, because I had that longer term bias on a higher time frame, I chose not to take a 2-to-1. I chose to take a larger swing play instead for about 7%, targeting 83.0. Okay, so that was my position sizing. That's kind of how I was going to approach this trade. A 50 pip stop loss protects me pretty well, you know, and it doesn't always have to be a below 0.618 for this specific strategy. If you want, great, you know, but sometimes it's going to be too wide. A lot of times you're not going to be able to get a 2-to-1 return if you're placing your stop loss at 0.618, but a lot of times you don't need to for this specific strategy. But you still want to kind of visually use your discretion by just kind of visually looking at it and making sure it's kind of well protected for your liking, you know. So I typed 50 pips. Looks good. So at this point, this was my position size, and I was waiting for that live entry. And still not happening. Still didn't happen there. Still not happening. And we're close. Let's zoom in. Still not happening. Boom. Broke out. On momentum. Trade was taken long. Right there. Let me put in my exact entry price. There it is. Okay, so that's where I got in, and trade was taken long. So let's fast forward on a 1 hour chart to that point in time. So you see the low test already happened kind of at the beginning of the day, but it still took a couple hours for that entry to truly happen. So at that point I was just kind of sitting and waiting and waiting and waiting till it happens. You know, that sometimes you gotta do that. Sometimes you're already ready. Sometimes I'm ready like 24 hours before and I'm just waiting and waiting and waiting. But it's worth it, you know? And boom, trade was taken at this point, right? So now we had a lotus and a double doji, right? And then that popped to the upside, breaking out. Great, you know, so that's exactly what it looked like at the time of the entry. And boom, the 4-hour chart. On the 4-hour chart, I'm jumping 1 hour candlesticks at a time. And here it is what it looked like on the 4-hour chart. So you can see everything's playing out perfectly. You got that momentum that came in. You got the deceleration on the 1-hour chart and the squeeze out of the wedge. You got the beautiful 4-hour candlestick formation rejecting the 4-hour 15.382. At this point, it's a no-brainer to me. You know, at this point, I went long, and from that point on, it just continued to explode. There it is. Right, so the only difference with this strategy, with this example compared to the other two, is I wasn't able to get that 2% at the highs. You know, that's the only thing. I always try, and if I have to target the recent highs, then and I cannot get a 2-to-1, then I simply wouldn't take this trade. If I was targeting the recent highs and I couldn't get a 2-to-1 of that stop loss because I couldn't, you know, stop loss would not be protected, then simply no trade. You know, that's okay. There's always better opportunities, right? That's something you always got to remember. Always better opportunities. So, professional risk manager. Look at that, right? So it's already popping to the upside. At this point, it's already running at 140 pips, so we're almost running at 3% here, and it's looking great. And this is already sitting way past the 4-hour high, so let's move up on that 1-hour time frame as well. You know, I think I'm gonna jump 30 minutes at a time, speed this up a little bit. Okay, there we go. Now we're exploding, and there we go. Now this is that first pullback that we witnessed. So let's have a quick look in the 5-minute time frame. Here it is. Quick dip, not a big deal. You know, the 1-hour chart didn't do anything. It was just a quick little pullback, and then it continued to go up. Right, a little bit of consolidation because this was again beginning of a new day, end of the previous day and the beginning of a new day, so low volume in the market, right? So market's consolidating, and then volume's picking up, and price action popped again. And eventually we should get a pullback, you know, because now this is kind of getting overextended. So eventually it should pull back to the 1-hour 50, and that's totally cool. You know, that's what it's doing now. It's just pulling back to the 1-hour 50. Let's have a look at the 4-hour chart to that point in time, right? So look, it just exploded really fast. You know, it's a big pop, and that's mainly due to that 4-hour low test. You know, that's a really nice reversal candlestick formation and that weekly bias. You know, I'm assuming that's why it just exploded so fast. And here it started to decelerate again. That was low volume, continued to go higher, and now we're in a pullback. So if you wanted to, you could have shut it down right there already for the 5-minute time frame was still higher. Whoop. Let me fast forward on that 5-minute chart. I'll show you that discretionary exit right there. It's not the one I chose, but it does fit one of my exit strategies. Okay, one of them. Takes forever moving on that 5-minute time frame. All right, so it's a lot of consolidation. So that's low volume in the market. Look at that, right? Volume is dropping as we started exploding to the upside. That's when the volume started increasing and increasing and increasing, and now it's the end of the New York session, so volume is dropping and it's gonna stay low. So when that happens, don't worry, you know, just sit on the sidelines. When the volume picks up again, it's gonna move back up, you know. So now here's the new day, and volume's starting to pick up. We're starting to move up. Now we're making new highs again. And at this point, that's when that 4-hour low test, 4-hour high test is occurring. And pretty much when the 5-minute 50 EMA breaks, right about here, you could have potentially considered a discretionary exit right there. And that would have been roughly $170, so just over 3%, almost 3.5%. Not bad, not bad. That's pretty much what I exited for myself. So this is kind of like I'm going to teach you 3 management strategies. This is more of the aggressive one, short-term aggressive. There's a short-term management strategy, there's a short-term aggressive, and a long-term management strategy that I'm going to show you. This is kind of that short-term aggressive. And that's totally cool, because we have that bearish candlestick formation and you believe that this is going to be a potential deeper pullback. So if you believe this was going to be a deeper pullback, well, you don't want to hold the pullback all the way down to the 4-hour 50, because at that point out, all your profit might just disappear. And if it breaks that 4-hour 50, then you have to exit. And if you're exiting there, then you're pretty much exiting for almost break even. So you could have used that discretionary exit, but I had a longer term bias on this. This is pretty much when this bearish high test was developing. So I'm like, yeah, I gotta watch it. But that weekly chart just closed so beautifully with that bullish engulfing. So I just wanted to let it ride and wait for a little bit more. Wait for like a trend change, wait for double tops or something on that 1-hour time frame. Because at this point, I still don't have bearish price action on a 1-hour chart. So that's why this is more of like a short-term aggressive management, because it might pull back farther, but you still don't have like trend confirmation that this trend is coming to an end, right? So I was still waiting, So let's fast forward on the 1-hour time frame now. Actually, let's keep on going on a 5-minute chart till we get the pullback. Right now, at some point, the pullback should begin, and here it is. There it is. So the pullback's happening, and we're moving. Right, and at this point, I think we're probably sitting at about 2%, maybe 2.5. Yeah, 2.5. And this is at this point already at that 1-hour 50, so now it should go back up, bounce off that 1-hour 50. I'm actually this is gonna take forever. Let me jump back. This video is already getting long. Here we are. Okay, so I'm jumping back to the moment I exited the trade. It's right there, okay? This is exactly where I took profit, so let's quickly move there on the 1-hour time frame and then wrap this example up. It was right here where I took profit. And on the 4-hour chart, right, so this is decelerating on the 1-hour time frame. And here it popped to the upside, and pretty much right here, I took my profit. Right, so you can see at this point, what do we have? Well, at this point, we're starting to decelerate at the double tops, right? Now we have some bearish price action potentially, bearish MACDs coming in. And at this point, I'm like, okay, it's slowing down, volume's starting to pick up. It's the London session, and it started to break back down below that 5-minute 50 EMA, right? And as it broke the 5-minute 50 EMA to the downside there, I ended up taking profit, for about 170 pips, which was just about 3.5%, right? And the thing what happened is it did go a little bit higher, so I shut it down pretty much exactly at this point, and it did go a little bit higher for another day, but then it turned around and started to fall back down, So that's why management is so important. Entering a strategy is one thing, but managing a strategy is another thing. And this is kind of how I managed that position. So short-term aggressive exit would have been after that 4-hour high test, but at that point there's still no trend change, and I still had a lot of bullish confluence, so I let it ride till I started to see some bearish price action. At this point, potential bearish price action with the double tops. I was happy with the 3.5%. I took my profit, and that is it. So I hope you guys enjoyed this example. Let's have a look at the next one. Okay guys, so now we're going to wrap up part 2 of the advanced continuation breakout strategy number 4. This is the last example that I'm going to talk about, and then we're moving on to the next strategy, the phase line break. So with this one, again, we covered this setup in the previous lesson, and just a quick refresher, this was a setup of patience, right? I talked a lot about patience in this particular setup, and I also mentioned that this was the first trade I have ever taken officially as an advanced continuation breakout. I have taken many ACBs prior to this one, but they weren't called ACBs before. They were just called discretionary trades because I haven't created a strategy before, but I liked what I was seeing, so I took the discretionary trades. Until when I saw this setup again, the pound yen short that I'm going to talk about here, at this point I officially called it this as an ACB. I officially made it into a strategy. I looked back at all the trades that I have taken, and I'm like, yeah, there's something there. They all look the same. They all have the same kind of analysis, the same kind of price action, the same kind of points as an ACB. So I put them all together. I'm like, yeah, let's call this an ACB, because I've seen it so much. I have already taken so many trades. Might as well make this into a strategy, refine it, fine tune it, and make it a strategy. It's something that I can trade with good strike rate and good reward risk. So this one was officially the first ACB that I have taken as a proper strategy. And let's talk about it, right? So let's give a quick kind of summary before digging into the entry, stop loss, target. And again, same kind of thing. There's not going to be much on that daily time frame. This is not the best example of this daily chart. The best example that you're going to have is that Kiwi dollar trade that I showed you, right? That's like a perfect example of an ACB, So if you want to look at perfection, is that ACB. If you want to look at the perfect intraday, you're looking at the pound Kiwi, So the perfect daily is the Kiwi dollar. The perfect intraday is the pound Kiwi, which was the second example, right? Those are kind of like really clean, perfect looking trades. The Kiwi yen was also a great intraday example. This one is not the most perfect daily time frame, but it's tossed it in there because I wanted to talk about patience when it comes to the intraday charts, right? Because when I took the trade short, the intraday charts were perfect. The intraday charts themselves, right? At the time of the entry. So let's look at the higher time frames real quick, right? So first off, what we have here is obviously the daily charts rejecting the previous highs, then kind of accelerated to the downside, but initially it looked like a bullish rejection of the 20 EMA, right? But then it continued to consolidate and consolidate and consolidate. And I took that position when there was that tweezer top right there, the highest reversal that we got. That's where I initially went short, okay? The daily chart doesn't show us much, though, the daily chart doesn't have much. The weekly time frame had that highest reversal off of the double tops at the time of the entry. The monthly chart was also developing a high test at the time of the entry, right? But the main setup really happened on the fact that the daily chart was kind of stalling at a little bit of resistance, but mainly it was on the intraday levels, right? So it's the break and retest of the 4-hour 50, the continuation, it's the advanced breakout on the 1-hour chart, right? So let's have a look at this in a little bit more detail, the entry, so focusing more on the patience part, that's really want to really dig into when it comes to this setup itself. And when you're taking these advanced setups, you really want to make sure that they're great, that they're perfect, at least somewhere, either on the higher time frames or perfect on lower time frame. You really want to make sure that they're looking great. Otherwise, if you're focusing on mediocrity, well, that's what you're going to get. You're going to get mediocre results. If you're focusing on okay trades, that's what you're going to get. You're going to get okay results. So you really want to focus on the setup where at the time of entry, without a doubt, you believe it's going to work out. Okay? Sure, there might be some risk factors or whatnot, but when you're looking at it at the time of the entry, you should believe that it's going to go down, or it's going to go in your favor. Specifically with these advanced setups like the advanced breakout and the ACB that we're talking about now. With the IBO and the CBO, they're safe setups. Everything is confirmed when it comes to the trend, specifically the CBO. So those are the ones where you can place entry orders. In this case, the advanced breakouts and ACB, they're not really setups where you can place entry orders. They're setups where you have to take a live trade because you're waiting and waiting and waiting until you have exactly what you want to see, So when this initially pulled back, if you look at the 4-hour time frame, when it initially pulled back near that 4-hour 50 MA, well, the 1-hour chart wasn't really giving us much. It broke back above the 1-hour 50, but nothing great, no great candlestick formation, no clear pattern. After that, it started to chop around, so there was no trade, nothing was taken. And then pulled back to that 4-hour 50 and that resistance level again, and started to decelerate. But again, no great pattern, no awesome candlestick formation. We just have a bunch of kind of consolidation sideways, right? The 4-hour chart gave a doji, but nothing kind of epic for me to be fully confident and really want to execute an advanced position until we finally developed this this ascending triangle here. And once the 1-hour chart developed this ascending triangle, now we had these short-term double tops, but it's mainly now we also had the momentum. We had the candlestick formation. So not only do we have the price action pattern now, which previously we did not, but now we have this price action pattern, we have the double tops, and we have the beautiful acceleration to the downside, the candlestick formation, right? The bearish engulfing. At that exact same time, the 4-hour chart was also developing this triangle, and at the time of the entry, we had this beautiful high test reversal, rejecting all those levels in the 4-hour 50 MA, right? So the previous examples that we looked at, they were a little bit cleaner, right? But when I was looking at this trade, I was just kind of waiting and waiting because I was curious to see what was going to happen. And then when this finally developed at this point, right at this point, as that 1-hour chart closes, this bearish engulfing, pretty much immediately after that 4-hour candle closes, the high test reversal as well. And at this point, exactly when that 4-hour candle closed, that's when I went short. I went short with a 5-minute break. Right, so let's zoom in on that real quick. There it is. So pretty much exactly as that 4-hour candlestick closed, the next 5-minute candle, I went short as it broke the pivot to the downside. And that was my entry, right? And at that point in time, I was pretty much 90% sure, confident that this is going to go down. I didn't have many doubts at this point because of the candlestick formation, because of the pattern, because of the beautiful rejection that happened. At this point, I'm like, yep, this is going down. So this is, again, patience. Patience is key. Patience is extremely important because, sure, I could have taken on the previous examples, but, nothing would have happened. It would have just kind of consolidated sideways. Why? Because there's no pattern. There was no great candlestick formation. It was just okay. But at this time, when this developed, it was a great setup. It was perfect, right? And if you look at, the Kiwi dollar example, you're going to notice that was kind of the same thing. If you look at the pound Kiwi example, you'll notice that it was like a beautiful, which pound Kiwi was the second example that we looked at. That was like a beautiful chart, beautiful intraday chart. You look at the previous setup of the Kiwi yen, the third example, was also pretty clean and pretty straightforward, But with all of them, you still have to wait and be patient till you have that candlestick formation, till you have that acceleration, till you have that pattern. With every single one, you have to be patient. But the patience really comes in with this setup, because sure, you could have taken it there. It wasn't great. You could have taken it here. It wasn't great. At this point, it's perfect, right? So that's what I really wanted to focus on and just kind of talk about that. So when it was finally perfect, I took it on that 5-minute break. And remember in the previous example or the previous lesson, I mentioned that, I didn't have this 2% rule at this point. So I didn't execute it based on that 2% rule, which is target the recent lows. That would be 110 pips. That would mean a 55 pip stop loss. But a 55 pip stop loss wouldn't protect me above the highs, just kind of barely. So it doesn't fit that 2% rule that I kind of have now. However, that 2% rule can sometimes be broken once in a while. Not all the time. Once in a while, you can break that 2% rule. I would suggest at the beginning you don't. You only take trades that fit that 2% rule, where you can target the recent 4-hour lows and have your stop loss above the highs with a 2-to-1 reward risk ratio. In this case, it doesn't fit. I would have to target the recent lows of 110 pips, right? And have roughly a 70 pip stop loss. And that would be a 1.5% position. So it doesn't fit that 2% criteria, okay? However, in this case, I'm like, okay, I like what I'm seeing. I like the weekly chart. And I believe that this is probably going to go down to that daily 50 EMA. So I ended up targeting that daily 50. And I actually ended up going farther than that daily 50. Right? Eventually broke down and continued to drop. But that's what I ended up targeting. I ended up targeting that daily 50. And that, with that 70 pip stop loss, gave me a reward risk of 2.75%. So good, I want to get at least 2% out of this position. But like I said, this doesn't fully fit that rule. So I wanted to really mention that because again, at this point, when I took this trade, at this point, I still didn't fully have that rule in place. That's something that I developed right after this rule by digging more into this strategy and fine tuning it. And at this point, I'm like, yeah, that 2% rule is important. Once in a while, I will break it if it's just a beautiful opportunity and the higher time frames are great. So I'm pushing it for a larger position, but I will not break this rule for taking less than 2%. I will never, ever take less than 2% on this position unless I'm shutting it down manually because it just kind of reversed, but I will never take less than 2% on this trade. So I will always try to aim 2% at the recent lows. If I cannot get that and the higher time frames are just great, there's a bigger opportunity there, then I will push it farther. Okay. In this case, I took 2.75% by pushing it farther. Okay. But I will never target the recent lows for less than 2%. Okay. It has to be more than that. So that's kind of it. I'm not going to go candle by candle here. I think everything's kind of pretty straightforward at this point. Patience is important, right? That's what I really want to finish off here, is that patience is important. Make sure you wait to execute the advanced continuation breakout. Same thing with the advanced breakout until you really believe that it's going to go in your favor without a doubt, like you're 90% sure. Yep, because of this candlestick formation, this momentum, I believe that this is going to go in my favor. Okay. If you have doubt, sit on the sidelines. There'll be better opportunities. When in doubt, stay out. But that's kind of it. So to finish off the advanced continuation breakout lesson, I really just want to say that patience is important. But also the advanced continuation breakout, you may not be ready to execute this strategy yet because it is a little bit more advanced. But you can use this strategy, you can use the advanced continuation breakout. By knowing the strategy, you can pinpoint traps in the market. Specifically, sometimes you're going to have setups that look like IBOs, the initial breakouts. But there's going to be two sets of confluence factors. So there's going to be confluence factors for a short trade. There's going to be confluence factors for a long trade. The IBO might be the short trade, but the ACB might be telling you that it's going to go long. At that point, stay out. Sit on the sidelines, stay out because it's not worth risking your capital on that IBO. But maybe the ACB might look really great and you might want to take that ACB instead. So that's kind of it, so that's really what I wanted to say. What I wanted to tell you guys with this strategy is that you don't have to execute it. Execute it when you're fully confident in your trading abilities. That's when you trade this strategy. But for now, you can really utilize it to prevent taking shady IBOs, the ones that are looking like traps because they have biases in both directions. So that is it, guys. This kind of wraps up the advanced continuation breakout lessons. This is part 2. So we're done with advanced continuation breakouts. Next, we're going to be looking at the phase line breaks and the last strategy out of the 5. So that is it, guys, for now. And I'll see you guys in the next strategy.